My name is Henry Jennings from Marcus Today. It is reporting season, and one of the big ones that I've been following has just dropped their numbers today. This, of course, is Zip, a company we have recommended and held for some time. So certainly a lot of interest in this one out there. And many will remember Zip from, I guess, times of yore with the buy now, pay later boom that we have seen. So it's interesting to get a little bit of a catch up and just come off the conference call with the Zip team. And I have to say congratulations to the team. They have delivered in spades. And this comes on the back of a number of upgrades that we've seen in recent months after the last set of results. So just to give you an idea, a cash EBITDA 170.3 million, up 147%. Operating margin, cash EBITDA divided by total income of 15.8%. Total transaction volume 13.1 billion, which is up 30.3%, and revenue margin 8.3%, which was slightly below, I guess, the 2024 numbers at 8.7, but that is due to a higher contribution from the US market. 93 million transactions on the Zip platform, 22% higher than FY24, and gross profit of 509 million. So all up, a pretty good set of numbers. Now, the market certainly has really accelerated these numbers, up 22% as I go to air with this one on Friday morning. So it's a pretty good set of numbers across the board. Also, importantly, I guess, from a Zip perspective, they are flagging dual listing and a NASDAQ listing at some time to come. Still a long way to go on that. Board approvals required and a lot of hoops to jump through. But it does, I guess, point to the big focus that Zip has on the US market, which is still very much under-serviced by financial institutions to what they call, I guess, middle and ordinary Americans, of which there's 100 million of those that they are looking to service. So there's plenty of upside to come in the US. Buy now, pay later, still not the thing that it has been in the past in Australia, that's for sure. Certainly listening to the conference call, the management was very upbeat and very optimistic about the outlook going forward. So that is clearly a big tick. And I would imagine we're going to see broker upgrades from here in the stock price targets. So again, another tick in the box. They did talk about 2025 being a defining year, and it's fair to say that it is. They've got no debt, balance sheet strength, and America is very much the focus. And the new team does seem to be very much focused on America, and we're not seeing any push for international expansion beyond Australia, New Zealand and America, as we have seen in the past, which was one of the problems that Zip had. It spread itself a little bit too thin. So all up, not bad at all. It will also benefit from lower interest rates. The market has celebrated this. The stock has been on a huge run in the last few years, and that does seem to be justified given these numbers. It is also potentially going to hit the ASX 100, and it is certainly the fastest growing stock in the ASX 200. So the 22% rise today, well and truly deserved. The question is whether it can continue to push higher. That, of course, is always the question, but I would expect to see broker upgrades on the back of these numbers. And finally, for those interested in a reporting season wrap, on September the 17th, I'll be doing a webinar just rounding out reporting season, what we've learned, some of the themes, some of the stocks that have performed, some of the stocks that have underperformed, and that should be interesting and available to all. So bear that in mind. Thanks very much for listening. Just remember, all of this is general advice only, so please do your own research. Contact your own financial advisor regarding any of the thoughts, ideas, or insights in this presentation.